Hello, everyone. Nebius, trading under the ticker Nbis on Nasdaq, is positioning itself as one of the most important players quietly powering the artificial intelligence revolution behind the scenes. Instead of building consumer apps or flashy AI tools, Nebius focuses on something far more critical: the infrastructure that makes advanced AI possible in the first place. At its core, Nebius operates as a full-stack AI infrastructure company. Through its cloud-based platform, it gives enterprises instant access to cutting-edge graphics processing units, the same type of high-performance GPUs required to train and run large artificial intelligence models. These are not consumer-level chips. These are the engines that power serious AI workloads, from massive data analysis to advanced model training and real-time inference. And the market has taken notice. Over the course of this year alone, Nebius stock has delivered explosive gains, rising more than 200% in value. This kind of move naturally grabs attention, but what's far more interesting is what may still lie ahead. Based on how fast the business is scaling and the demand it's seeing, a relatively small investment today has the potential to grow into something dramatically larger over the long term. In fact, under the right conditions, a $1,000 investment could potentially turn into a five-figure position by the start of the next decade. One of the biggest challenges facing the global AI boom right now isn't software or talent, it's electricity. Advanced data centers consume enormous amounts of power, and access to reliable energy has become one of the most serious bottlenecks in AI infrastructure expansion worldwide. Nebius has been aggressively tackling this problem head-on. Earlier this year, the company significantly raised its power capacity ambitions. It now plans to lock in approximately 2.5 gigawatts of contracted electricity by the end of 2026, a massive increase compared to targets it was discussing just a few months earlier. This step alone signals confidence, long-term planning, and a clear belief that demand for AI computing will continue accelerating. What makes this even more compelling is that Nebius isn't building capacity blindly. Much of the computing power from its upcoming data centers in the United Kingdom and Israel has already been pre-sold. These facilities are being equipped with NVIDIA's newest Blackwell GPUs, which are among the most advanced AI chips available today. This means Nebius isn't speculating. Customers are already lined up, contracts are already in place, and revenue is already visible. Execution has been another major strength. Nebius has shown that when new capacity comes online, it doesn't sit idle. The company has been extremely effective at converting infrastructure into revenue at impressive speed. In the most recent quarter, revenue jumped more than 300% year over year, reaching $146 million, largely because the company managed to fully sell out its available capacity. Demand visibility is where the story becomes truly eye-opening. Nebius has secured massive, multi-year agreements with some of the biggest names in technology. One deal alone involves supplying AI processing power worth $3 billion over 5 years. Another agreement stretches even further, totaling more than $17 billion across a similar time frame. These aren't speculative partnerships. They are long-term commitments from industry giants that need reliable AI infrastructure at scale. Looking ahead, Nebius is targeting an annualized revenue run rate of between $7 and $9 billion by the end of 2026. And analysts believe this is only the beginning. Forecasts suggest the company's revenue could grow from just over $500 million in 2025 to more than $27 billion by 2031, an extraordinary expansion in a relatively short period of time. Of course, valuation matters. Right now, Nebius trades at a very high multiple compared to traditional businesses. But context is critical. If revenue grows anywhere close to expectations and the valuation multiple gradually compresses as the company matures, the math becomes compelling. Even at a much more conservative valuation level by 2031, similar to established data center operators, Nebius could command a market value exceeding $230 billion. That would represent more than a tenfold increase from its current market capitalization. In other words, If execution continues, demand remains strong, and the AI infrastructure wave keeps building, Nebius has the potential to evolve from a fast-growing infrastructure provider into one of the most valuable AI backbone companies in the world. This is not a story about hype. It's a story about power, capacity, contracts, and execution, the unglamorous but essential foundations of the AI era. This is not financial advice.